With over 20 years of real estate experience and selling over 150 homes a year, Laura Sanders is the #1 RE/MAX agent in the state of Florida for 2021. Join us each week as we discuss how to make money through buying and flipping homes, to renting versus selling, and everything in between. To join the conversation, call in live 888-994-4995, Studio A.
Hi everyone, and welcome to Making Money with Laura Sanders, and I am your host, Laura Sanders. Every week we help you talk about something to help you make a little money, save a little money, or maybe just help you navigate this crazy world that we live in. And today we're going to talk about condos, condo questionnaires, all the documents that are needed in order for you to get your condo sold and to make sure that you're having qualified buyers coming in your home. With me today is Cliff Bernstein with Fairway Mortgage. Welcome, Cliff.
Thank you, Laura. Nice to be here.
Thanks. So condos, they have been fun.
It's a very frustrating process lately.
Yeah.
It's more so ever since the unfortunate events at Surfside, where the universe has changed. But it amazes me how many haven't changed their protocol or their procedures while in the beginning stages of listing a condo. Now, I'm not privy to those conversations. I just see it on the financing side, after an executed contract. And by the time we get the paperwork and the documentation from the association, it could be 2-3 weeks into the process.
Mm-hmm. And we're wasting people's money.
At that point, you've done the appraisals are in. You spent money on the inspections. We certainly have a conditional loan approval. We just don't have the condo approval. And a lot of times, in many cases, it becomes an issue because of what is discovered on the condo docs, the questionnaire forms. Everything comes into light, and it becomes an issue. Had we known, prior, we could have taken it a different avenue, could have gone different structure, and we could have saved a lot of time, if not the deal.
So when you're selling a condo, right, and let's just say, because I could tell you this, in 2024, I could see somebody bought their condo in 24 and now they're selling in 26. And what I'm seeing is that the value has gone down significantly from then to now. On top of them have paying a ton of assessments, right?
Correct.
So is there a way, because the value might still be there, but the desirability is not. Can you offer to a buyer a percentage of a buy-in? So let's say, for instance, you paid $275 for it, and it could still appraise today at, let's say, $265, and a buyer's willing to pay you $240, but the association, follow me here, requires 20% down. Can you get the 20% equity from the seller for the down payment? Is that feasible to try to create something like that?
So are you saying that when you're saying 20% down that the association requires, is that more of a skin in the game type of clause in the bylaws?
I get what you're, okay, so let's say it's
because
not.
Of financing?
Let's say it's not a skin in the game for a clause for the association. Let's say it's for financing, because let's just say you have 9.2% in reserves and you need 10, yet in the next 9 months you're going to need 15, but.
Correct. So basically, due to the reserves not having the proper reserves of the 10% required to transfer in a reserve account, it becomes an automatic 25% down payment. Unless, but again, we could overcome that by financing a second mortgage into the loan structure.
But what if the seller is willing to give that 20% of equity?
Well, at that point, he's willing to give in terms of holding a note?
No, getting that money coming. Is there a way to do that?
There's no way to do that.
Somebody recently told me they were going to do that on a deal that I had that had gone south, and a mortgage broker called me back and said, okay, your client doesn't have the the 15% that we would need to make this loan work.
Correct, yeah.
So the seller, because we already have the appraisal, we know it's worth X, is going to give, he has 5, is going to give them back 10% in equity of the property, which was like 30 grand.
Sure. So yeah, if it's a gift, you could do a gift of equity, but that would have to come from a family member. You can't. That's not a suitable. You could do a gift of equity, but it has to be from a family member. You can't gift it. The seller cannot gift you the equity in that
Interesting
situation.
that this guy said this was going to work. It's insane. I get some of the
Listen,
craziest things.
Listen, these are guidelines. Perhaps, I'm not so naive. Maybe it's further guidelines. I'll look into that, and but I'm pretty sure.
Because I think that would be something the listeners would be definitely interested to know if there's a way to do it.
Yeah,
Because people are like looking to sell their condos.
And they want to sell the condo, but yeah, we do give. We do
Remember
give them
Boca?
gifts.
Remember it was
Yeah.
$1 for the condo, and then the seller would have to pay the
Yes.
$100,000 buy or some craziness.
I started off, on a little negative note, but don't get me wrong. I'm very, very bullish on condos because of the situation. And most of the appraisals that I'm receiving, I have right now in the
Coming in higher.
in the pipeline, and this is in North Miami, close to the Aventura area.
Oh, well, that's desirable for
about-
religious reasons.
Yeah, it was but it was a 200. The purchase price was $295. Got the appraisal back last night, $370,000 on the appraisal.
Yeah, because people are so scared to buy these things. So now people are literally giving their condos away to people.
Sellers are nervous, or wow, maybe this. But that's what the opportunity is, because all this negative, all these situations with special assessments and inspections going on, that's all been completed.
Right.
And that's out. If I feel bad for those that purchased condos in 2018, 2019 prior to Surfside, and now you have a retired couple living in a condo that they purchased in retirement, and now the condo, because they did not have their 40-year inspection completed, and the city after Surfside knocked on their doors, you better have this inspection completed or we're going to start fining you $1,000 a day. They complete the inspection, and now there's every unit there's so many critical repairs that it needed to be done, and now you're getting hit with a $400,000 special assessment that you can't afford. So you have to sell your condo. But who's going to buy that condo
With $400,000
and inherit a $300,000? So you take that $500,000 condo, and now you have to sell it for $250,000 or $200,000 just to get it sold because of the special assessment.
Yeah.
It's horrible, but that's all in the light now.
Right.
And the condo prices haven't caught up. So where else are you gonna go for value right now in property?
Like this is like everything comes back again, right?
Yeah.
And you say, oh, if I shoulda, coulda, woulda, held on to it, waited.
Right. Of course.
So,
Yeah.
but I guess the most important part of today's show is that you're talking about due diligence on behalf of realtors, right?
Correct. To me, if one is listing a condo, I think the first thing you have to do is do your due diligence, do your research with the association.
It's also important for marketing purposes.
Exactly. Otherwise, you're selling it blind. But find out. Do your research. Is there any pending litigation? Are there any special assessments? If there are special assessments, are they due to critical repairs? Has the work started? When is the work going to start? If it hasn't started, do you have an engineering report stating that it's safe to occupy the property while the work's going on? These are all questions we're going to have, and we rather know these things sooner than later, certainly before you're in a contract.
Sometimes some of it, though, comes back in a lien search later. So there's some
True.
things we can't.
So, yeah. Listen.
Some things we can't obviously catch, but
You're not
I
gonna
have an
catch
entire
everything.
checklist, right? I have a checklist, which that checklist kind of almost coincides with the condo addendum, which shocks me how many realtors don't have their condo addendums already filled out and ready to go.
It amazes me. But just simple things. Take a look at a budget. Have a professional, have one of your referral partners, have one of your lenders review the budget.
Why can't you be their
Right.
referral partner? You're
Well,
supposed to be
that's-
asking them. You want to be their referral partner.
That's what I do for my partners.
Right.
There's no, I can't tell you.
It takes you like 3 minutes to look at it.
Not even 2 minutes. I'll review. I'll give you some feedback, what needs to be done, or where we're going to take this financing. Is it a Fannie Mae loan, or do we have to go on the non-QM side? I just received the condo the other day, and I had no idea they were even looking at this condo. I just received the contract. The first thing I did, I pulled it up in Fannie Mae's website, which I have access to, and it's on the non-available list as of November of 2025. And it was due to a pending lawsuit. So, and
Now can you look and see if that lawsuit's been...
yes, but now it was a 45-day contract, and the lawsuit actually has been settled. But because it's on the we still have to go to Fannie Mae, get the documentation, all the documentation, the settlement. We're going to send it to Fannie Mae. They will review the settlement, and they will determine if they could take it off that unavailable list. But that's not going to take, Fannie Mae's not going to do that in 30 to 40 days. It's going to take some time. It might take 6 months for them,
Right.
if not a year. So, yeah.
Oh, so I guess that's a dead deal.
Well, it's not a dead deal.
Well, you could switch to a
I could still
non-conforming.
go to non-conforming.
How much higher an interest rate would that be?
And again, it was not available for Fannie Mae. So again, we can't take it to Fannie Mae or Freddie Mac. So you asked the question, are they going to be paying higher terms? Yeah, of course the terms are going to be higher, but depending on a lot of different factors, you might be 3/4 of a point higher. It's not going to change anybody's life. It's not going to be as sexy as that number that you see in the window or anyone that's advertising. It's going to be a little higher, but it's not changing your life, and you're going to get your loan closed. And reality, how long is somebody in that loan anyway? They're usually refinancing within 4 to 5 years, or they move on from the property. The important thing is making sure you're going to get that loan closed on time with no delays. There's a lot on the line.
So we're going to go to commercial break, and when we come back, we're going to talk more about some of these other documents that we need when listing a condo and what you should be doing, and I'm sure your lenders can help guide you in that process as well. So stay tuned, and we'll be right back. Check out our sponsors.
All roads lead home with Fairway Home Mortgage. When it comes to home financing, who you work with matters. At Fairway Home Mortgage, we combine the strength of a national lender with the care and accessibility of local mortgage experts. We offer a wide range of home financing solutions, personalized guidance, and a streamlined process designed to keep things simple, from application to closing. Because at Fairway, home isn't just what we finance, it's what drives everything we do. Connect with Cliff Bernstein, Branch Manager, NMLS number 7853 at 561-213-6852 to see what your options are today. Company NMLS number 2289. This is not an offer to enter into an agreement. Not all customers will qualify. Subject to underwriting approval, other terms and conditions may apply. Equal housing opportunity. Loan Officer NMLS number 7853.
At JK Closing Attorneys, we do all of the same things that a title company does, but with the benefits of being a law office. We can help with residential real estate, short sales, commercial real estate, refinances, 1031 exchanges, and FRIPTA withholding.
Contact JK Closing Attorneys today at 954-332-3111. Again, that is 954-332-3111.
Priority One Credit Union of Florida is a welcoming credit union that makes your financial success our #1 priority. We offer lower loan rates, higher deposit rates, and common sense local loan approvals, with nationwide access through shared branching.
Hi, I'm Dina Hennessy, President and CEO at Priority One Credit Union. We are open to the community. Anyone can be a member of our credit union, and we would love to have you.
Contact us today at 954-335-5100. You can also reach us at PriorityOneFL.org. Your financial success is our priority. That's 954-335-5100.
You have been watching Making Money with Laura. For more information, contact Laura Sanders at 954-650-0827 or visit her website at laurasell.com. And now back to the show.
Hi everyone, and welcome back to Making Money with Laura Sanders, and I am your host, Laura Sanders. Every week we talk about something to help you make a little money, save a little money, or maybe just navigate the crazy world that we're in. But today we're talking about navigating condos. And you know what? There is some money to be had out there right now. Now's the time to actually look at buying some of these condos. All the assessments are pretty much at the end. And what is the one way that you can protect yourself to make sure that you know where they're at with assessments? Well, that's pretty easy. Last 12 months,
Well, you could look at
meeting
the
minutes.
Well, you look at the minutes exactly. But how
Yeah.
many are reviewing the minutes?
I am.
Which
Oh,
yeah,
by the way, it's
that's
also
why,
on the
that's
new
why
condo
you're a top,
addendum.
That's why you're a top agent, right?
Yeah,
in this
but it's
country?
also, so there's a new condo addendum that just came out. I don't know, not too long ago. One of the questions asks, and if the seller does not disclose something that's being discussed, it doesn't mean that it's been assessed. But it's, you know, they could be liable to have to pay that for
So
not disclosing.
basically, so if there's not a special assessment going on, but it's discussed that we may have to do it,
You need to
that
disclose
you
it.
need to disclose that.
Yeah, it could put you. Here's the thing, like this job's kind of a little scary sometimes because you're trying to guide these people. It's very, very hard for agents to get information from condos, like super hard.
But why is that?
You ask the question and they're like, oh, you have to get that from an owner. It's like, we've been hired by the owner
Right.
to sell their property. Like, hey, help us.
Right, and isn't your job to be that liaison and not get the owner involved?
Yeah, and so unfortunately, a lot of times I have to tell my assistants, hey, we need to get the owner involved. It's their property, and if we're not getting what we need, we can't sell what we have appropriately, if that makes sense. Like,
Yes.
you know, you need to know all the information. So here's the funny thing about meeting minutes. You're not required to have one every month. You could have one once a year. Now, obviously, if the association says, well, we've only had one meeting once a year for the last, I think going back 3 years would be fine, getting the last 3 meeting minutes. But
Right.
you're really supposed to ask for the last 12 months of meeting minutes. Because typically you would find that they do it once a quarter. They have to put notice out to let you know that they're having a meeting. Like, everybody's invited to these meetings.
It's yeah. I mean, it's a no-brainer because everything you possibly, all your questions are in those minutes, and you're going to save a lot of issues down the road, from insurance. You know, these days the price of everything is going higher, so a lot of these condos, the first thing they do is they try to cut some things out on their insurance. That's like on the renewal. That's an easy thing to do. All right, I'm going to cut this out. I'm going to cut that out. I'm going to cut out sprinkler insurance, things like, you know, something silly like that.
I think that's what happened on a deal. It was coming within the 30 days of renewal. So they ended up taking the 10% versus the 5% deductible because they were in the process of getting the roof and they couldn't afford the insurance. So in order to decrease the price, and so this was all happening. So this is what happens. Like, sometimes you need to get that insurance and see, well, is it expiring anytime during my deal?
They're getting a bare bone policy, but I don't think the unit owners, they're all for it. Oh, we're going to save a lot of money. Our HOA maybe will come down a little because the insurance is, but they don't realize what they're signing up for.
Right.
Because those things are there for a reason, and electrical breakdown coverage, all mechanical breakdown. These are all things that are required that nobody even asks to even, you know, do we have that or not? And they're just happy with the monthly premium because they're trying to lower the costs. And, you know, the problem is you're going to take that for financing, and we're going to see that that policy is not qualified for financing because of certain things.
So that's another question before getting
we're
your-
always blamed as the lender.
No,
because 2 weeks later, well, why didn't you tell me this, a week ago?
Why
Well,
didn't you get that?
we don't want to start.
To me, as an agent, I'm trying to get the insurance policy. I'm trying to get the budget. I'm trying to get all this. Another thing that people don't even think about, flood insurance.
Oh my God.
Forget about the 5 and 10%. Now, are you in a flood zone? Do you require flood insurance? Does the building carry flood insurance? Like, I have to tell you, this is exhausting.
It's exhausting. That, I must admit, doesn't come out that much, but it does.
It does happen.
It does happen.
It is very common.
When there is flood insurance required and the condo just doesn't carry it.
Right.
Which
Now,
is
you do
crazy.
have probably a loan program. Tell this to the agents. You probably have a loan program that will allow them to put their own flooding
They
policy
could put
in
their
place.
own. They could put their own policy, but if the association.
But again, that would be a non-conforming loan, which
Right,
would be
it
a
would be
little higher of an
non-conforming.
interest rate.
And then the problem is if the association doesn't carry flood insurance and is, the common areas the lobby gets flooded, that's gonna cause a special assessment for everyone, in the unit.
Right.
So it just becomes an issue.
So, funny story, and it was funny. I had done another show where I had talked about going above and beyond. So I had a situation that the building didn't have flood insurance, so we couldn't get the mortgage. So I had the listing. I went to the president and I actually called up my insurance agent and I said, hey, how much to insure? There was I want to say 20 units. And I called my insurance agent. I said, how much is it for flood insurance for the entire building? So insurance wasn't a lot.
Was it a lot?
It's like $2,800
Yeah, it's probably not.
for the entire building.
Right, because you really don't have to cover much of the units.
I
It's
went to
really-
the president, said, here's a quote for flood insurance for your entire building, because they actually the clubhouse had their own, but the
Okay.
building didn't
The building
have.
didn't have it.
Yeah. So, and believe it or not, they bought it, and we were able. Wait.
Oh.
So the buyer ended up backing out, but I'm like, hey, we have a certain amount of time to fix something. I fixed it, and I was like,
Oh. Well, breaking news now, but breaking news, some good news. Fannie changed their guidelines on replacement costs for the roof, which you no longer need replacement value on the roof for condos.
oh, okay. So that could be helpful.
That's a big win. Yeah, that's going to
So,
be.
and before we get to what's a good number to get a hold of you at, because we're starting to run out of time, I heard, and tell me if this is true, I heard something somewhere, and I don't know where I heard it, so obviously I see a lot of Facebook, a lot of this, a lot of that, that credit score is not going to be a requirement anymore for mortgages. Is this true, or am I just hearing folk tales?
No, actually, what you probably saw was Fannie Mae, Freddie Mac lowered their guideline. I'm sorry, Fannie Mae. I get confused sometimes with Fannie and Freddie. But Fannie Mae just lowered their minimum credit score requirement from 620 to 600, which is huge.
I thought some people have like 580 scores, 560s that you can do a loan.
You can't, FHA, we could go down to 500.
No kidding.
On FHA, yes, but that's going to require anything under 580 will require a 10% down payment.
But that's good to know, because I think that the
good, yeah.
population is under the thoughts that, oh, you have to have a 650, a 700. So it's good to know
Under
that
580. And some might give you some pushback. Oh, we're going back to where we were 20 years. No, there are things in place. Bad things happen to good people, and for whatever reason, they're under a 580, but they deserve to have home ownership. And now FHA is giving us that opportunity to provide that for them. So
That's awesome.
that's big.
Yeah, that is big.
I'm excited about that change.
And real quick, what is the difference between Freddie and Fannie?
Okay, so Fannie came first. Fannie Mae creates, as you know, they create the liquidity in the mortgage space. They make the guidelines, and
It's always the woman that's got the upper hand. Go ahead.
Fannie has the upper hand. But then a few years later came Freddie Mac.
It's like Adam and Eve story, isn't it?
They're both quasi-government companies. They're talking about privatizing them, but basically Fannie and Freddie, they do the same thing, but sometimes different guidelines. Like for example, Freddie Mac just came out with a great guideline change that we know that we can now pay off car leases to qualify.
That's great.
That's big.
Awesome.
Fannie
yeah.
doesn't allow us to do that, but Freddie does. So there's a lot of different things like you might
You
have
would think
to.
it would be Fannie would allow that because a woman would be all into
Well,
more debt.
they're the ones
No,
who
just
make
kidding.
what. But so you really have to know when you have a conventional conforming buyer. Am I taking this Fannie? Do I need to take that Freddie? And I've been doing this long enough where I can have a conversation and the mind's always turning. Hey, now we have to go Fannie with this, or we have to go Freddie.
Right.
A lot of self-employment guidelines also.
It's all experience. So
Yeah,
what's a good number to get a hold of
Best
you?
number 561-213-6852.
Okay. And if you're thinking about selling or buying, give me a call. Laura Sanders, RE/MAX Direct, 954-650-0827. And again, like always, thank you so much for listening to Making Money with Laura Sanders. And until next week, make it a great one.
Thank you for tuning in for Making Money with Laura Sanders, a name you can trust. To join the conversation, call us at the studio, 888-994-4995 Studio A, or contact Laura directly at 954-650-0827. Laura Sanders, a name you can trust. We look forward to seeing you next